Great. All right. I think this works better. There's sharing screen and sharing the app. All right. Can you all hear me okay?
We can, but I didn't hear the recording started on your,
No, I didn't either.
so make sure speaker.
No, I'm not muted. It's uh,
You, no, talk to me.
talk, say hello. No, you're not hearing
Oh,
me?
yeah.
Yep. Okay. All right. Are we just waiting?
No, we
Oh,
want it.
okay.
I'm recording.
Okay. So we're going to go through sponsor award, the post award management um, side of things. What happened to the slideshow? That's not the slideshow because it's not advancing. I think I can do it.
Oh, okay, yeah.
Whatever.
We can still see.
Today I did it from the share drive instead of my own since we had problems yesterday. Okay. So research administration. So what is kind of what we call here the post-award administrator? You've seen, like Jada and Kim who are functioning as post-award administrator. What is it that that team is tasked to do, if you will? So this again has our little grant management, and we're talking about this financial tracking, reporting, and the operational delivery and reporting, which is more like to sponsors versus here might be, well, both are reporting to the PI and to the sponsor. We work with the PI through the entire life of from the whole stage from pre to post. Here in our unit, like we have a hybrid situation. Some people are pre only, some are post only, and some are pre post. I'm a post only. So what I'm tasked, I need to make sure that all the expenditures that are being charged are allowable, not only by the sponsor, but also follows institutional. So there's a precedence of sponsor your own institutional policies and so forth. And then the federal guidelines. We ensure, as we went over yesterday, that effort is correctly reported across those awards, and then we monitor the projects to make sure that everything is efficiently and accurately reported and submitted. So I did a little bit of an award setup. I know there's this small gray area, if you will, of when the baton gets passed from pre to post, right? And there's this award setup, and at this time, there may be like, hey, I know an award is coming, right? But I don't have my contract. Or I have the first year of funding, but my second year isn't here yet. So we have a process that's called a provisional award number. So sometimes we have to set up an account so we keep things moving because some contracts take forever. So there's certain reasons why and when we would do that. On federal awards, we do, many of them allow us up to a 90-day pre-award spending. So if we have communication from the sponsor, like, hey, this is coming on this date, then we can kind of get things moving a little sooner. We route a request to set it up provisionally. Now, if we set up something provisionally, that also means the faculty member has to have like a guaranteed account number to cover any expenses just in case something goes wrong. So we're also it's a fine line, right? But it is a possibility. So these are kind of the reasons that we would have a PAN at 90-day. We know that we have an anticipated start date. We know it's like getting finalized. PIs need to hire staff, and we can't hire staff without an account number. So that could be another reason, like, let's just get this set up so we can at least get our staff in place. And again, the reason, one that I feel more comfortable when I do PANs, these I really want assurances that the money is coming. This one here, like I've gotten an award, but it's, we had a government shutdown, so things are delayed for 3 months. So let's get it set up. We know the next year's funding is coming, and we can get the next year's segment in place. And this is pretty much an eternal like how we do that, but whatever your institution's policies and so forth would be what is placed in over here. Okay. Did you touch on the pants? Oh, great. See, I didn't know. See, and it is sometimes like it's like it ties, like it's also something that I look at, So it can depend, right? And there's also institutional award setup, which is not like our department, but that is like the central offices. They do award setup as well. So when the contract comes in, they set it up in our financial system. Yeah. Right. Or they'll let their post-award person know, hey, this is coming. But it's needs to be, there has to be some kind of documentation that it's coming. And, I'd like to have a reason, of why, a justification of why. I'm a little more on the conservative side. So this here, I kind of started from like if my faculty member got a new grant just came in, right? So my typical thing is I like to have what I call a kickoff meeting to go over that specific contract. And that would be a different meeting than what Kim had done with like, let's look at your portfolio. So this is like, let's look at this new grant that we're adding to your portfolio. So, and I would go through the notice of award, the contract from the agency. I usually read it ahead of time and highlight things. And then I go back to, in my meeting, I'm like, okay, these are the things that, we need to pay attention to. I look for restrictions, terms. What are my compliance things? Is there anything different from the standard, typical NIH terms? We go through the budget because the budget that was submitted to the sponsor and that dollar amount may be different than what we got. So if there's a reduction of funds, then we need to redo the budget a little bit. Where are we taking this from and what might that budget look like? And then we go through like, hey, because there can be up to 9 to 18 months between the time you submit and the time you get awarded. So who are the staff? Are they the same people that were in the proposal? Were there any changes? Then we also go through like anything that's outside my institution. Do we have subcontracts? Do we have consultants? This is what you need to do to get this consultant set up. This is what I need to do the subs. Confirm everything with that faculty member from the proposal to now that we're at awards, and just have that kind of conversation. And I left my water bottle. So after that meeting, again, at Emory, we have lots of departments and schools. So there's cross collaboration between departments. So now I'm going to reach out. I'm in public health and there's a co-investigator in School of Medicine. So I'm going to reach out to that contact and say, hey, so-and-so just got an award. Person in your department has this much effort. Here's your budget. Here's, and then they get that set up in HR. So that's that cross collaboration. You may not have that. HR based on school. Yes, here it is. Yes. Yes.
So let me. What?
Yeah. Yep. Yep. That's exactly right.
So we have 9, 10, all the schools and revision. They're 10. It could be a team of 1, or it could be a team like us for 30
It's more.
and 4 public health altogether.
And so what the central office does when we get a new award for budget setup, they will just put one line item for the direct cost and one line item for the indirects, and that's it. And then it comes to us, and then we need to then put the budget based on, like, if School of Medicine has effort, and this is again just an internal policy, for example, but we have different project accounting. So one award could have multiple projects. So School of Medicine, if their budget is at least $10,000, they'll have their own budget, and then they manage it. I look at it from the big point of view, but I still look at it, but they are responsible for making sure they stay within their individual budget. So we go through, then I will go in and allocate the money that needs to go to personnel, the money that goes to the fringe, what's for travel. So we do that. And then we go through and just kind of, if there's any questions in terms of, like, the staff have, like, how do I make expenses or whatever, I give a conversation, say, hey, this is your resources of how you make a purchase, how you do it, whatever. And I just provide the resources to them. I don't do those things. It's like separation of some responsibilities. Okay, so if there is a subaward, a true meeting the definition of our institution, and I'm subbing to your institution, then there will be a separate budget justification, a scope of work. We have, all the kind of compliance measures, the financial conflicts of interest, if there's human subjects work, all of that stuff is part of that package. Then I get that together in our financial system. I make the request. So I'm like, how does my contracting OSP office know that that needs to happen? So I will put that all together into the system, and it routes to them. And then they prepare the contract to go out to the subrecipient. And then I'm financially tracking those expenses as well as we're invoiced. Okay. Oops, I keep looking over here. All right, this is just I'm not going to go through all of this because it's a lot, but it is a slide that kind of shows, again, the importance, like, where I, as the post-award administrator, am interacting, this is like me, with the PI and with my central office. Okay. So I'm the PI sometimes will interact with the staff, but very rarely. And I'm the buffer, if you will, making sure that I am aligning with what the PI needs to do and what we need to do for Emory University to be meeting its obligations. So the PI has to make sure that, and I like showing this to faculty sometimes, I'm like, this is what you are responsible for. You need to communicate to us your effort. You need to review all your expenses, approve them. You saw today the Fort report and, going over the expenses. So all of that is stuff that we're doing. I'm looking at subaward balances, verifying expense documentation, cost and approval of any exceptions, which I will get into a little bit, looking at encumbrances, the payroll, confirmation for payments. If it's a clinical trial, that's a slightly different. Clinical trials are different. And they have, like, invoicing on a per patient. So looking at those things, confirming. monitoring the milestones and deliverables, looking at the cash that we've received on the award and making sure that is in place as well. And then submitting and what we need to our central offices in order for them to ensure compliance with reporting back to the sponsor. Next. Okay. I know you probably have had this shown before with the pre-award, like building a budget and what direct costs versus indirect costs are. Now, why is that important now when we're in the post-award management, and how do we think about that? Because we are the ones that are approving expenses. So we want to make sure that what we're the indirect happens automatically, right? But I'm responsible for reviewing and approving the direct cost. And I need to make sure that they are compliant with whatever the terms of that particular contract are. So it has to, direct costs need to be directly related to that project, right? Of that account. And if the expense meets all of the following criteria, and we call these the 4 principles. And those are that it is reasonable and necessary, allocable, consistently treated. Have you heard, and you know these, and not specifically designated as unallowable. And meaning, and a lot of that unallowable is things that might fall under your indirect costs, right? What are the types of expenses that are captured under what is an indirect cost cannot be charged directly. And if it meets all of those conditions, we can, move. And then I have a little breakdown of reasonable, like what does that mean to be reasonable? And I think Fran was the one that said, like, what a prudent person would consider they would spend this money. You can't like just spend, it's kind of like if I go out for a meal, I'm not ordering caviar because that's not what a prudent person would do. Like for if they're traveling, whatever, it's not like, oh, I can spend the government's money any way I want. You need to kind of think of it in a prudent way. Allocable is the one that sometimes I think people have a harder time understanding what is allocable. I have a couple of examples, 2 examples of this is like, if I buy a 500 ream of paper and I put it in my copy machine, and that copy machine is used for the whole department, that is not allocable 100% to the grant if I bought that paper. Same thing if I buy furniture, why we can't buy furniture, because if I'm buying a chair to sit at, that chair is not allocable specifically to that grant. Now, if I am buying a piece of equipment or a freezer or something, that can be something too, where if it is a shared something, then you have to come up with a methodology of like, okay, this isn't 100% allocable to this award. It's more like 20%. And it's based on usage. And then you can allocate a certain percentage to a grant.
But in real life, it's the what
Yes. And you used to never be able to buy a computer and they have gotten a little bit leaner on computer purchases, but you do, right. My old institution, we would allocate based on whose computer was it and what was their effort allocation. So if they were 100% on a grant, or a computer was like, we buy sometimes computers to deliver experimental reasons or whatever. And if you sit and you are confirming that it is only being used for this purpose, it can be charged. But it all comes down into your justifications and your documentation of those justifications. Consistently treated, again, is that as an institution, you can't in one hand do it this way and then in another situation do it another way. And that it is the costs can, they're not part of the FNA or they're not on that list of unallowable costs. And the indirect costs, again, you know what those are. Those are the costs that cannot be tied specifically and allocated to one specific project. They're with, utilities and all of that. So post-award management. So what we need to do is review the approval of those direct expenses. So I've spent many a time going through expense reports and receipts and making sure that what I'm approving to be charged the grant is allowable. I've spent time, and I'll give you more examples, but it has to be at a high level. I'm checking debt. Are there funds available to pay the expense? I'm not running it into a deficit, that there is allowable budget, that it is allowed to be charged to that specific grant. So if I have a grant that I'm paying a consultant, but we never budgeted a consultant, I may need to get prior approval. Not in all situations, but sometimes. So, and that it's reasonable and necessary, and that there is also backup documentation that is provided with that expense that I can review. And that we are maintaining that backup documentation. Unallowable, questionable costs. I can't tell you how many times in my career I've gone and clicked over here. This is my best section 7.9 that has the full list of the OMB of allowable and disallowable expenses. So these are just the most common ones. They're not all of them. Like alcohol can never be charged to a federal grant. The cost of having a party or entertainment. Advertising, marketing, and public relations. When I see those, it's not that they can't. It is, again, when I say questionable. So under certain circumstances, some of these can be charged. If I am putting an ad in the newspaper for subject recruitment to participate, then that advertisement is okay. So a lot of it comes down to the purpose of that questionable account code. Fundraising, office supplies, again, that was the example that I gave, but there are times when you need office supplies to execute your grants as well. So that's books, journals, membership subscriptions, software. This needs to be updated for the current times. Training grants are slightly, there are somewhat little niches. The other thing with the memberships is and I do have an example, a case example. If you're attending a conference that is related to the work of the grant and paying the membership fee reduces your overall cost, then you can allow it. But you can't just have a membership fee to this society, that, whatever, and because that comes under your own professional development.
The other piece of so
Yes.
big question. For those flag items,
And I had that grant too. They were giveaways, and I had that on one of my PI's grants years ago. And I did have in writing from the program office, like I had to get additional, it was written into the grant, but very vaguely.
We have a process here.
Yeah. Yeah, I have a slide on it. Yeah, I think it might be coming up right about now. Exceptions. So when we start having, because a lot of the times when people ask a question to us, a lot of times what we'll say is, it depends. It's a very common answer. And when I say it depends, it's going to be like, I need more information to make that determination, right? So there is gray, and I always try to find a way to make it work unless it's flat out not going to be, or I say, this is what I need in order to make it work, right? I need an email from your program officer saying this is allowable, and we've done that. So they have to be like within that project scope. And again, writing that grant, the budget justification, like if this PI, like she had $15,000 for what they call swag, right? Giveaways at recruitment tables and things of that nature. But she didn't, and that comes up on our general ledger. That kind of stuff falls under like a marketing expense, which is on a lot, questionable. So I look then to what was posed to the sponsor. I'm reading that justification and I said, hey, this is a bit vague. I think we need to get more, we have to have more approval. So she wrote, and then I got it documented, and then I had filed a CAS exception so that we had it on file, that we had this approval to charge that on this specific grant. So again, things that are easily identifiable. So like those kind of 4 things. And I talked about that budget justification. A lot of the times, like if you can write these things very clearly in your budget justification and it is approved by the sponsor, then you have approval at that time. But if it doesn't happen there, then we do this whole CAS exception form. And it used to be kind of a PDF, and now it is an electronic form that we actually route through our system. And that form has to say what the cost is. And it's really specific where it's saying, how is it scientifically justified? Meaning how is it helping the aims of that particular grant? Why is it necessary that has to be part of it? So we talked about office supplies. Software is a tough one. So now there's some software that will be allowed and some that won't. Things like Microsoft Office Suite are not going to be allowed because I'm not using it just 100% for one thing, but I might have a statistical software program that I need to buy because I have to do particular analysis, whatever. So there are some things that in today's day too, we have a lot of web-based stuff that's going on, and I've seen a big shift, and I think the government hasn't caught up to that. Like there's a lot of third-party vendors that we use to and it's called hosted software. So it's a little bit hard. It's different than the old days where you had like, hey, and you couldn't, but people are doing things for specific projects, and we get those CAS exceptions. We also talked a little bit about the office supplies. So if I'm doing a particular office, like I need binders for organizing the subject files and things, there is it's technically an office supply. So if it wasn't budgeted, I'm going to get a CAS exception. We also have an account code where office supplies comes up as no, but if I code it as a research supply, because I've gotten communication that this is being used specifically for this project, then I can charge it. And it still has to be different. It's not like your scissors, your paper, whatever. And if I see it without a justification, I go push it back and go, I need to have, like, why is it just this project that this is going to be used for? Postage is also one where, again, it's not your general mail. It has to be to send out consent forms, to send out things that are specifically related to that study. Same thing with telecommunications, so when we had landlines, you can never charge that. But now we have cell phones, we have work that happens in the field. So again, when those things happen and come up, then we get those CAS exceptions on file. Examples of exceptions, the subscriptions books, I had given this talk to trainees. So on training grants, there's a little more leniency because like an F-31 or a T-32 by nature is for professional development. So some of those things sometimes, and there's rules. If you can get the book from your library, your institutional library, you can't buy it. But if you can justify that this is not in your library,
It's-
absolutely.
maybe 2 minutes.
Yes. We can pause, yes. That we have to have the, not just the credit card receipt, the itemization, and also proof that you paid for it, right? So there's both of those. I also check the dates, that they have to be within the date of the award that you're reimbursing. A common, I get this a lot from faculty questions. I want to go on this conference. It's scheduled in August, but my grant ends in June. If I pay for it now, is that okay? Like, no, it's not okay. And then we also have to have the PI approving all of the expenses. I'm looking at invoices for consultants and subcontracts. Like, there has to be, the federal government requires particular things that must be on there. The invoice number. If there's a PO, sometimes consultants won't have a PO number. But again, I want to know what are the dates of performance that are being invoiced so that I know that it's within the scope of the award dates. What was actually being done, or what were the budget lines of the sub? The amount billed, the rate, and then signatures on there. And there's actually, for sub awards, there's a very specific language which you can get from OST, but there's like federal kind of statement that is attached on the sub awards. And I can also ask at any time if it's not provided, like I need your payroll, I need this, whatever. That is the backup to that invoice. Okay, ongoing, so you've seen what this looks like because you have the Kim seeing the whatever. It is that partnership between, so we provide those summaries, the detailed accounting, run the reports, run the labor, do that reconciliation that I was saying yesterday. We're forecasting what are the future expenses. So I start there, have the meeting, get those changes, update, all of that. I'm looking, depending on how far the plan is, like I have one PI's grant is ending in 3 months. I'm like, okay, this is the balance. What's our spend plan? How are you planning to continue? Or if it's in deficit, what are we doing or projected deficit? How are we going to avoid that? Looking at the PO encumbrances and communicating any changes in scope, effort, or budget. Click. Is it clicking? Nope. Click again. There we go. Cost transfers. So this is some of the kind of follow up outside those meetings when I have these changes and I know what I need to do. So cost transfer are like correcting your general ledger. So mistakes happen or things aren't communicated timely and we need to fix that. So this is just again about what documentation and justification that you need to accompany that. So cost transfer is the non-labor from one project to another. Sometimes we correct the account code. So that might be like that office, like where we have an account code for office supplies, but we also have research supplies. So if I see office supplies pop up on my report, I'm going to research it to say what was purchased. Do I have a CAS exception? Do I have, did this slip by or whatever? And if it's determined that it's a research supply, then I can go in and I can change the account code and it's not flagged, right? And then the salary correction. So if I'm going to we call them RSTs here. So we would retroactively go back up to a certain point as long as effort hasn't been certified. We can do up to a certain, like Malika was saying in the meeting that you saw today, like our effort is certified through August, so we cannot make any changes to anything prior to September. All right, so, and this is important because, we have had audits. When you go through audits, if you don't have your backup, they can disallow the expense being charged to the grant. And they'll say, sorry, you don't have the right documentation, or this didn't follow the rules, and it has to come off the grant. The money is returned back to the government, and then your institution has to pay for the expense. So that's like why all of this is really important is we are in place to make sure that we are being reimbursed according to the contract and the government rules. So things that could trigger audits, and I kind of liked this one, timeliness. So what auditors would look for, like anything that's, transfers that happen over 90 days. If there's no documentation attached and there's no explanation of how we allocated it. If there's, is there a shared resource? This happens more with like in the labs that are sharing resources, right? What's the usage log? Equipment. So you can't order equipment if it wasn't approved on your budget. So if it's not in your budget, you can't just buy equipment. You have to get a prior approval to do that. Journals that have even dollar amounts, right? Very rarely is anything 0 with no cents. So they look at things that are kind of flagged. The date of the transaction is not within the performance period. So anyway, it's just the importance of being consistent and trying to be timely with your cross transfers. Transfers, anything that's less than, sort of our guidelines. If it's less than 90 days, you could provide a brief but adequate, all transfers should have a justification. Ones that are under, you don't have to have a whole, when they go over 90 days, you need to be a little more detail, saying why and when the original charge, the reason why the account wasn't originally charged, a description of why it was appropriate. Why is the receiving account, how is it benefiting this expense, the grant? And then what are you doing to prevent that mistake from occurring again? And then any other documentation is appropriate. So if there's email, like if an award is set up late, which happens, right? And I didn't do a pan because I was, not sure. But now like we incurred we incurred the labor, but we didn't charge it. So I might go back a little bit because there were administrative delays. So I would be showing my documentation of that occurred and this is why. But we want to be careful. Again, if PIs will put things into emails that we never want an auditor to see. Just spend it down. No, like you can't just spend the money to spend the money. You have to be out, benefiting the award. We don't say to clear the deficit as a reason. You know what I'm saying? And then we have I think Sam might have talked a little bit about the NIH 25% rule. So not only is that applying with effort where you can't, if you committed effort reduction, but also the rebudget. And we have some leeway because a budget is a guideline. They will allow us up to, once you hit 25%, you need prior approval. So up to 25%. You can move your budget around. So I can over under expense some of my approved budget line items within that parameter. And it's usually on my total, based on my total cost. So if I have a budget for $200,000, any result that would, this is rounding up to the full 25, but anyway, increase and decrease of more than 50,000 would be considered significant rebudget. And cannot do that without the prior approval. Your denominator base for determining that excludes the effects of prior year carryover. So that's the other thing. Like if you're in year 3 of a grant, you have to, and this one's really hard for me to explain. I just, you can't kind of take into effect the money you didn't spend from the prior year. Yes, like if you have a grant that has automatic carryover, it excludes the money you didn't spend in that year. That's the easiest way to say it. Okay. And then if you have a modular grant, which we don't have too many here, but do you know what a modular grant? Okay. So the rebudgeting rule does not apply to the modular grants because it's not an itemized budget. And I know like CDC is even a little more pickier. So if I submitted a budget that had 0 travel, said they're very specific, and I then have travel because that was there, look more at the line item and not just the total budget. So if I am expensing something in a budget category that I had no budget for, I need prior approval.
Even the fringe in the CDC has to be exactly.
Really?
Especially for
Oh, but your research grants, there's a little more flexibility. Yes. Yeah. I've said this, I've been in research for over 30 years. And I feel like every year when they figure out one thing that they're going to pay attention to, once they get that done, they move on to the next thing. So things that we never were questioned for, we end up being, like they look at, and that's how honestly, some things that I thought I was doing right. And then they get questioned. And then I learn, I hadn't been doing unobligated balance the right way. So this is just high level of the things that would require, and I know Robert's going to go more in depth on what we would need prior approval from a sponsor administratively. Potential reporting requirements. I think Sam had also touched on, again, that expanded authority versus not expanded authority and whether the word was SNAP or not, right? So if that also just helps me, like if I know how I have to manage, it's really important. I have to have my award set up different. for award that is not SNAP, and I don't have expanded authority because I cannot carry funds from one year to the other. So those are really important. It also tells me if I'm non-SNAP, I have to do a financial report every year to the sponsor versus one that is not. I only need to do one at the end of all years, right? And there you go. Again, those, I think this was probably in Sam's slide, so I won't go over this again.
The dates were there.
Yeah, so this just is like an example of, when I have an award, I'm like, I know, is it SNAP, non-SNAP? What are we doing? So SNAP, like my progress reports are due 45 days before the next budget period. If it's non-SNAP, it's 60. And for both, no, regardless if they're SNAP or not, you have to submit a final at the end of the award, 120 days out. Oh, this is very specific to Emory. I was trying to take the Emory specific stuff out, but financial statement reports. So this is another part of the post-award management is getting those expenses reconciled, approved. And if I'm doing it in an ongoing way, it's easier, but still, if I have a report due, sometimes I'm doing an RST and it's posting after, but it was for the period before. So anything I have to reconcile and to make sure that all the expenses are within that award date in that budget segment. And reporting cost share, I'm checking for cash at this point, and sending everything to our central offices. And then the closeout process, making sure that everything on the award is clean. We have all the money. There's no outstanding liabilities. And then our central offices kind of go through. It's really like this has been a big push at our university to get everything up to date. And happy to say we're there or better than where we were.
So just there's a federal requirement to institutionally close out an award. So that means hopefully that everything has been completed, all of it hangs, delivered, the financial reporting, the GL is matching what you reported to the government, and then there's also kind of sign-offs from the institution that this is complete. And that's fundraising agency then.
Yeah.
So,
And then it can impact your future funding if you're not closed out in the timely manner. So that was my post-award. Did I miss anything in post-award management? Okay.
you have any questions? Yeah.
So I'm gonna close.
Some of this is split, but good for the individual.
And